What's going on, guys? It's Josh again, and today we're going to cover the basics of options trading. And as always, I want to start with the mistakes. And we are going to make this a multiple part series. I even have one of my good friends. He's been trading for some time, but he doesn't really know options that well. I'm going to post our one-on-one sessions that I have with him so you guys could see kind of how I'm breaking down everything from the basics to what's a put, a call, how it operates, understanding the chain, to finding plays, to determining the stuff. But really, there's a lot of things here going on when it comes to option trading. And then, the only thing I could say, go to the link in the bio, start now so you could get set up with paper trading, understanding to get in the right mindset, and join the free course. It's literally free. You have nothing to lose, no excuses. And I even checked the chat earlier, right before I made this video. It's crazy. We already have almost 100 people there. It's been like 24 hours, 48 hours or so. And we have people in there talking, helping each other out, putting in questions, asking stuff about plays. So I think it's going to be a good learning environment, and that's where I'm going to be able to field the questions. So before I get into this too, again, check out the course. Make sure you subscribe to the channel if you're new so you don't miss any of these videos, and you could go through all the other almost 200 videos on this channel already, over 200 videos. So you could go through there, start learning, and make sure you drop a like and comment and, give me some questions, show me some love. I always appreciate that. So getting into it, the biggest mistake I want to focus on that people have is they don't understand the difference between a call and a put, or actually what it underlying really means. And what I mean by that is, and this is they take the day trading mentality of options and they come into it thinking that, well, okay, I'm just going to buy the option and then I'm going to sell it for a higher price. They just think, they get the basics. Okay, a call means it's going to go up. So if the stock goes up, my option is going to go up and I'm going to sell it at a higher price, or and vice versa with a put, which means it's going to go down. That's not the case. So this right here is an options chain. Now, if you've already traded before, you're familiar with it. But the options chain for you new guys, this is going to let you know all the different options contracts that are available in different time frames. With options, there's really about three main things. It's the time frame, which is here, August 3rd, which would be this week, August 17th. You could go all the way up to like 2 years on some contracts. As you see here, we could go to 2020 on the Apple contract. So you could get a time frame and you're making an agreement with somebody to buy or sell a stock. And again, we're going to touch on that a lot more. But that's the first part, the time frame. Then the next is the strike price, which we'll agree upon. And then the last thing is the price of the contract. Those are your three main factors. But now the part that people really, really miss and beginners are really making, they're picking any time frame, usually the time frame that's the cheapest. And even though you've seen some of my plays, again, you guys got to know, hopefully the diversity of plays I've shown you guys, I'm profiting off of monthlies, weeklies, yearlies. You could see not every, I'm getting similar gains, but different contracts and different plays are going to warrant a different contract. You don't just go for the cheapest one. You don't go for the shortest time frame. You don't just go for the long time. That's where you guys are going to start learning the difference. I've said this before. I'll say this again. The two aspects you need to understand is what the stock is going to do. An option is a derivative. It derives its value from something. And then the other side is going to be the option chain itself, this whole thing, and finding the right option that means it's going to do good. So like I was saying, the biggest mistake people are making is that they're coming in, finding an option. So like they think Apple's going to go up on earnings, or they think it's going to go up in a day, whatever it may be. They buy this for 80 cents. And I'll explain this too. Actually, we're covering a lot so far. If you think about it, every contract is worth 100 times what you see. So this may look like 80 cents. Times it by 100, you get $80. So why is that? Because when you buy one options contract, it represents 100 shares of the underlying stock. So that's why this is telling you, and even for you guys who've been trading this, you may not realize this. This is just telling you your per share premium. You're paying 80 cents above per share, but you have to buy a minimum of 100 shares with the contract. So you don't need to buy 100 contracts. You buy one contract, you get 100 shares is what it represents. That's why for a contract, if it goes up $1 you're going to make $1 in the money. Not in that. See, this is the confusing part, and I'm going to make another video on this. If it goes past your strike price, so let's say the stock, you get a strike of 200 and the stock goes past 200, every $1 in share price it goes past 200, you're going to make an additional dollar. So, but understand your contract may gain more value from that, or it may be worth less depending when you buy it on. This is where contracts and options gets very complex. But the biggest mistake I don't want you guys to do with real money, and this is why I'm saying paper trade, so you could make this mistake on itself, is buy a contract and just for the sake of, yeah, I'm just going to buy it and I'm going to flip it and scalp it. That is the number one biggest mistake. Now, the next biggest mistake is they don't understand what the spread is going to do. And the spread is the difference between the bid and the ask. If you guys aren't familiar with bid and ask, let me know below and we could cover that. I think it's pretty generic if we're trading itself already. But in general, the biggest mistake, and this is where even the big, experienced traders are making issues, they don't really understand the spread and what it means for their value price. And now another warning I'm going to give for TD Ameritrade, Thinkorswim, and your paper trading, it's going to show you something called the mark. And the mark is literally going to tell you the in between price between your bid and the ask on a contract you own. So you might buy a contract. I'm trying to think, like right here, you would buy a contract between 4 and 8 cents. It's probably going to tell you the mark, the bid is at 4 cents, the ask is at 8. It's going to say the mark is at 6 cents. So even though you own this stock in your portfolio, it's going to value it based upon it being you getting filled at the middle. That's what the mark is. It's just assuming the middle, the average of the bid and ask, and you're going to say 6. So this messes people up because if you buy, 10 of these contracts, right? You bought them and you think now they're worth 6 cents each, 60 cents or $60. That's not the case, because realistically, with something with this big of a spread, a lot of times with options, especially when they're further out of the money, you're not going to get filled at that. You never know, okay? And that's the thing I'm going to tell you. So this is the next mistake I want you to account for, is be conservative when you factor in the prices and learn how to read what the option's worth. What I mean by that, when you're looking to buy an option, don't look at the bid price. When you're looking to buy, always imagine that you're paying for it at the ask. If it's not a good deal at the ask, then it's not a good deal, and factor that in. And when you're looking to sell, don't look at the ask price, look at the bid price, because that's what you're going to be able to get. Because options, you want to make sure, you could look at this bid and the size, and we'll talk about this when we get there. I think I'll do that in another lesson. Again, I don't want to throw too much at you guys, but you want to make sure, especially with these out of the monies, and if you have a lot of options in general, you want to make sure you could get filled, and you want to be able to cash out right away so you have your money. Be quick. You don't have to. I don't do stops. I don't do any of that. I look at the bid and I make sure my play is going to be profitable at the bid. So if you're owning something in TD, you own 10 contracts in this case, and it's 9 cents on the bid, 11 cents on the ask. It's not worth, even if the last trade goes through at 11, your contract is not worth 11 cents. It is worth 9 cents. When you're going to buy, look at the ask. When you're going to sell, look at the bid. And now that is it's just crucial. So if you guys could account for those two things, know how to value your options, and understand that the value now is, and we're going to make another video on this, so please don't worry, but I just want to make sure you guys don't get caught up thinking on the easiest basic level with options. It's just like penny stocks or day trading. I'm just going to buy an option and I'm going to sell it when it goes up in price. Can you do that? Yes, 100%. But that's a big mistake, because there's so many factors that come into valuing an options contract that you want to know what instance is going to make it. Even the shitty penny stock traders and day traders, even let's say day trader, because penny stocks is retarded. If you go buy a stock, you're buying it in hopes that it's going to go up. So this is why I'm saying be careful with the options, because you need to know what's going to make it go up so you could do that instead of just kind of buying it and hoping for the best that it'll go up. It's just a big way I see a lot of people when they start out lose money. And it was kind of mind-blowing till I talked with people to see that this was actually going on. So we'll start with those mistakes. I do want to cover the basics, and like I said, I'm going to go put those videos with me and my friend. But give me some questions now that you want me to cover. You guys are asking for the basics, and again too, please don't ask for some stuff if you're not in the course, because it's free. You have no reason not to. We have the chat room, but that is going to cover a lot of it, and that's over 2 or 3 hours of content already that explains so much to just get you guys off the ground floor, understanding the basics. So where some of the stuff I'm saying now shouldn't be too confusing. But anyways, I'll leave it at that. I love you guys. Stay in school, subscribe, turn on those notifications, and leave me some questions. Peace.